Dividend stocks have always been very popular for investors to have. It's an easy way for you to see you're collecting a return of your capital at a specific rate. So it's nice to have dividend stocks, and I have a good number of dividend stocks in my portfolio. I wanted to share my top 3 dividend stocks that I feel are the best stocks, paying a very good dividend. They have a very safe dividend and are stocks that I'm really glad that I own. None of this is direct investment advice. Please make your own decisions on stocks. But I wanted to share 3 stocks that I own that I really think are really good stocks. Now, my name is Victor. I have an MBA and I have a lot of business experience. I like really analyzing companies and then making decisions on which companies to invest in. If you've seen other videos, I do deep analysis on those companies. I get a valuation and then I make an investing decision. In this video, I'm going to cover pretty much many of my dividend stocks just from a list perspective, but then I'm going to dive deeper on 3 that I think are really good. Let me get into those 3 stocks. Investors, including myself, really like dividend stocks because they have a predictable income. And as I get older, I think having a fund, and I have an income stock fund where it's producing income, and I want to see those dividends be produced. So that way I feel like I'm never touching my share count, but I'm getting a predictable income. They reduce risk. I truly believe that if a stock is giving you a dividend over time, let's say it gave you 30% of your original investment back in the form of dividends, I feel like part of my investment was returned to me, and I only have 70% of my investment at risk in that particular stock. So I totally believe that dividend is a reduction of risk over time, and you have profit in that stock without selling. You're participating in the profits of that company. So that's a really good feature about a dividend stock. The benefit to the company is you have companies that have proven businesses that are more mature. I mean, even Microsoft has a dividend as an example, and they increase a greater loyalty from investors who are receiving part of their investment back. And when a stock goes into a dividend state, like Apple more recently started paying a dividend, boy, look at the Apple stock now. It's really boosted its stock price. And if a company has excess cash, what are they going to do with it? Invest it and then get maybe a return on that cash? Maybe that's one option, but how about return it to investors and really bring up kind of like the enthusiasm for your company by doing so? Now, here's a long list of dividend stocks that I own, from really going from the highest dividend paid down to the mid 3s. I have other dividend stocks as well, but these are probably the highest paying rates on dividends. And some of these are really high risk, and really they're intended to be more of a long shot kind of investment, kind of a high return investment in some cases. But in some cases, they return a really nice dividend. I'm going to point out 3 of these guys that I think are really sound companies. They're sound dividends. They can afford to pay those dividends, and they're more of a stable company that I'm glad that I'm invested in. But you can see there's some really big dividends listed on this list, and I'm glad that I've owned these companies. They've returned really good capital to me, generated really good income. And over time, what I want to do is I want to have enough income coming from my portfolios where I can never need to touch the principal. That'd be a really neat thing to have out of my portfolios, is the income produced, pays for everything my wife and I need, and we never have to touch the principal in our portfolios. The 3 companies that I wanted to single out that are probably the best ones, and I'm going to give you one that's higher risk, one that's medium risk, and one that's low risk. The higher risk one is Panel, symbol Panel, which is Pangay Logistics. And this company, I've been an owner for several years, in and out of the investment, and they pay almost 7% dividend, and they can afford it. The stock price is really down compared to historic prices, and so it has an upside potential, but they pay a really strong dividend. The other one is Ternium. This is more of a mining, or I can say a steel mill kind of company, and they're mostly in operations down in Mexico, just south of the United States, producing a lot of the steel that manufacturing companies need, both in Mexico as well as in the United States, to make cars, appliances, and all kinds of things that need steel. And that's a really good company. They pay a 6.37% dividend, really sound company. I look forward to telling you more about that company in a couple of slides. And the last one being the low risk company would be a real estate investment trust by the name of Care Trust. And this company is in the healthcare industry, providing facilities for older people to go to live in and receive medical attention while they live there. A lot of people need that type of care. And Care Trust is just being a really steady operator, paying a really nice 5.5% dividend. Now, let me go in individually and give you more details on each particular stock. I'm going to start with the riskiest stock, which is Pangay. And Pangay does ocean freight, and they do ocean freight for aggregates and materials like sand or gravel or those types of materials, and moving them from one place to another. And they have been really profitable over the last few years. Currently, they pay a nice dividend, almost 7%, and they can afford it. Their dividend payout is 67%. And I would point out that they're having a down year. Shipping rates are really down, but I expect that shipping rates will pick up. And when they do so, you're going to see that their dividend, the actual dividend, is going to be going up, because these guys, they move their dividend up and down based on shipping rates and the profitability of the company. So this is what I believe is a high risk company that pays a dividend that they could afford. So I like stocks like these because if Pangay were to like double in value, that'd be a huge win. But while I wait for that to happen, because I believe this is a good company, and when shipping rates recover, they're going to be worth a lot more. But in the meantime, I get paid 7% on my money, which is a very good proposition. This year, the company is up a little over 6%, which is good to see. So that is Pangay. A company that I consider is more like a medium risk is Ternium. The reason I put them in the medium category is that they're in an industry that is susceptible to commodity price fluctuations, and steel had been going down. Now it's picking up, and it's really moving in the right direction for Ternium. They also are located outside the United States. They operate primarily in Mexico, as well as other places like in South America, Argentina, and they have a little bit in the United States. But Ternium is a solid payer for dividends. 6.37% as a dividend. They could afford that dividend. They're paying out 37% of their EPS, which is very good. The stock is up 41.7% year to date. So it's been a double winner. It pays a high dividend, and it's been going up in value. I think there's more upside in the stock. In fact, I think it's discounted 39%. And if you want more details, watch my detailed video on Ternium or any of the videos I'm covering. I have detailed detailed videos on the three companies that I'm covering on my channel. So this company just looks good from every perspective I see it, and I'm glad I'm an investor in Ternium. And the third company is a lower risk alternative, a real estate investment trust. And real estate investment trusts tend to be lower risk propositions. And we really compare their earnings, not their earnings per share, but you compare their dividend and you compare it to their funds from operations. When I did so, I did a video on this company, as mentioned. You get a 76% paid out from funds from operations. Now, real estate investment trusts need to distribute a majority of their funds from operations to stockholders. That's one of the rules of being a real estate investment trust, and they get preferential tax treatment. They don't get taxed on that on the earnings that they distribute them out to stockholders. So that's a really good thing. They pay a nice dividend rate of 5.47%. And they're up 9% this year. So combined, I mean, you look at this return, it's almost 15% return, almost keeping up with the S&P. So that's a lower risk investment in a real estate investment trust. Dividend stocks are a really good option for many people. They could really, hang on to a stock for a long time and be receiving that income, which is really, really useful to many, many investors. And I really like dividend stocks. They produce that income that I want, and I really see them as part of my future, really for the next 20 years, unless something changes. And those are the top three that I think that I'm invested in. These are really good quality companies. I'm going to keep buying into these shares because they're just quality companies in my eyes, and they pay a really good return. So really three good options for me to keep investing. Keep in mind that this is one investor sharing his experience with YouTube. I'm not recommending you buy any of these companies. Please weigh your decisions very carefully and seek advice if you need it, because I am not providing any financial advice or recommendations. Thank you very much for watching. Do me a big favor, like my video and subscribe to my channel. Thank you, and good luck investing in 2023.